So let me show you how to take back control and make your attention work for you, not against you. So most traders, they see random highs and lows, but what they are missing are the liquidity traps that smart money uses to dominate the market. And those gaps in price, they're not accidents, they are fair value gaps, and they're your ticket to sniper precision entries. So today I'll show you exactly how to spot them on gold and trade them like a pro. Let's dive right in, guys. This is gold on a 1 minute time frame, and as you can see, we are right now in a downtrend. So that's all we need to know. All we need to know is that we are making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. You know the deal. So now let's zoom a little bit in and let's check out before the opening of the Asian session. So right now we are going to look out for a trade at the opening of the Asian session, okay? We mark out the highs, that's our buy side liquidity. Another high right here is another buy side liquidity, and we mark out the important lows before the opening of the market. Here we have the sell side liquidity. Now, as you can see, market right now before the opening is between the buy side and the sell side liquidity. So when the Asian session opens, market needs to make a move and it will be manipulated to at least one of those levels. So here the market is open, and as you can see, we started to consolidate right here, and then we reached our first buy side liquidity right there. Now here we could have a potential trade setup, so let's take a look. As you can see, we had a beautiful big red candle that's indicating that the market is potentially willing to go lower. But before we enter a sell position right here, we need to get a confirmation with a fair value gap, and as you can see right here, we had a little fair value gap. So let's see if the market is reversing to that fair value gap and maybe giving us a trade setup. Now this is looking like a pretty good sell setup right now. If we get another red candle right now, we have touched with the wick the fair value gap, candle closes below. So if we see a red candle right now, another candle closing lower under the fair value gap, that could be a good entry. Okay, so the market didn't do that. So here you could have entered the opposite direction. So now we are aiming at the next liquidity level, and that's right here, the next buy side liquidity. Okay, so now we reached that other buy side liquidity level. Now we can see that we already created a beautiful wick here. Let's see what happens. Okay, so this is could already be a good setup if you're an aggressive trader, if you love taking a little bit more risk to get a better entry, then this would be a good entry. Why? Because we have that buy side liquidity, we have that wick being created, and we already saw that once we reached this buy side liquidity that the market started to move aggressively down. So we are expecting that this is going to happen here again, but even more aggressively, because right now we are higher than we were here. Okay, so if this is a manipulation move, this could be a big trade. So right now we have a color flip because we have a red candle that is closing below the opening of the green candle. So that is a color flip, and that could be your entry right here already. But to keep things safe, because I want to teach you guys the right way, the most safe way to trade is not taking this trade, but is waiting for more confirmation. So let's see what happens. Okay, so now we can see that we have a lot more information. So now we have a consolidation area. You see that the market was vibrating between these high and low, and you can see that once the market broke out here, closing of the red candle, that was your entry, guys. That was your safer entry, because right now we have a confirmation that we broke the structure, which was the consolidation we had here. We broke the structure, and now we are aiming at the next liquidity level, and that is, of course, that's our sell side liquidity level, because this one has already been breached. So we only focus to the sell side liquidity right now for our take profit, and that would give us a risk to reward of 5.3. So let's see if the market was able to give us that. As you can see, we have another fair value gap here that we can extend So right here we had the breakout of that little consolidation area right after we reached that buy side liquidity. So this was our entry. We started to move down, but as you can see, we had this fair value gap right here. This fair value gap has been breached right here. You can see that we tested it again and we came back down again. Now here it's very important to note what happens. We break out the fair value gap and then we come back into the fair value gap. And now we are in the fair value gap, consolidating. As you can see right here, we have a consolidation going on. Now, you must understand that once we break to the downside again right here, this is a super safe setup to take. Also a setup that will give you lots of profits, and it's easy to tell where the market is going once it's breaking this consolidation area. So let's see what happens. I'm going to slow things a little bit down. Okay, so that was very close. So you can see that we already broke it. So that would be another entry that you could have taken. If you would have taken that, that could have been an entry right here with a stop loss above the opening of the candle, aiming for that same take profit area. So here we reached the take profit area. We had a risk to reward of 7 and a risk to reward of 5.3. So here you have it, guys. Two amazing trade setups that you could have taken by only knowing: 1. Only trading at the opening of the session. 2. Draw your liquidity levels. 3. Confirm with a break of a fair value gap and enter the trade.